Hey, Bulls and Bears, thank you for joining me today. We got a lot of economic, financial news to get caught up on, and we got a couple mega billionaires here to talk about. A lot of things happening. We're going to tie it in with the broader economy as always, give you the big picture. Please make sure you like and subscribe if you like this channel. It really helps out. Thank you very much. Let's go ahead and get into it right now. First of all, Jeff Bezos. Bezos is out there telling people not to buy big ticket items, specifically cars, refrigerators, and other big ticket items. Now, it's very interesting. He didn't come out and say don't shop Black Friday on Amazon. But let's get down into this here. Bezos, it's very strange for someone like Bezos, who is in the business of selling things, to say this quote, if you're an individual and you're thinking about buying a large screen TV, maybe slow that down. Keep that cash. See what happens. Same thing with a refrigerator, a new car, whatever. Just take some risk off the table. And we've heard from Bezos just in the recent history here this year, saying that he expects things to get pretty bad. Quote, if we're not in a recession right now, we're likely going to be in one very soon. That was an interview that he had did previously. Now, he did go on to say, don't purchase or use caution with things like big screen TVs. Well, they sell big screen TVs on Amazon. I'm actually surprised Amazon hasn't gotten into selling cars. They're selling everything else, cars and refrigerators. But wow, very interesting. And we know that Amazon's going through a big layoff, 10,000 people right now. 10,000 people before the holiday shopping season, or as the holiday shopping season is just ramping up, is I'd say that's a red flag. What do you know? What do you think about that? Now we're going to talk about Elon Musk next and what's happening over at Twitter. It's pretty chaotic. All right, so here's what's happening. The latest at Twitter. Elon Musk made a hardcore ultimatum, which sparked an exodus at Twitter. A lot of these people, imagine having a tech job and all of a sudden, boom, it's gone. Tech jobs pay pretty good usually. And a lot of these people live in Silicon Valley and in the Bay Area, California, very expensive houses. How many of these people went out, got a 30-year mortgage based on their nice tech income, and now they're leaving the company? And, what are they going to do? Are they going to find another job that pays that good? Well, it's very unlikely because the entire tech sector is undergoing a lot of changes and major shifts right now. And this is going to bleed over to the larger economy, into the housing market, you name it. It's going to affect it. The more layoffs, the less people are spending. The less people are spending, it snowballs, because then other jobs are going to start dropping now, or going away. It's a big mess. It's a snowball, and I've often referred to it here. Once it gets rolling, it just gets worse, right? When the money's easy and prices are going up, that creates jobs. You need more salespeople. You need more delivery people. You need more people working at the furniture stores, at the home improvement stores. When real estate is booming, when prices are going up, when sales are booming, now the opposite is happening. And we're going to continue to see more layoffs. And add on top of this, the layoffs just from the economy and the higher interest rates, now we've got this chaos over at Twitter. My question to you is, how does someone like Elon Musk, obviously he's very successful. He's been, it's said that he's the richest person in the world, or he was, and then he lost it and somebody else, gained ground on him, back and forth. There's debate on if he is actually the richest person. There's some people in the shadows that I think are way richer than Elon Musk, if you know what I'm saying. But Elon Musk, how does somebody like Elon Musk, he seems like he's very, people have called this reckless, what he's doing at Twitter. People have called this environment that he's created at Twitter chaotic. How did he become so successful if he's truly that reckless and that chaotic, right? So something tells me that there's a lot of things happening with this Twitter acquisition that are not being made obvious, right? So, it's not ground that I tend to get into if I can't prove something or point to a data or a statistic. But I'd like to hear from you. What do you think? Something seems very odd, very strange about what's happening at Twitter. And, we're going to keep you updated on it here. Let's talk about real estate now. We kind of touched on it a second ago. Real estate, wow, mortgage rates drop by the largest amount in 41 years. Mortgage rates plunged by nearly a 0.5% just this week, marking the largest week-over-week decline since November 1981. The average 30-year fixed mortgage fell from 7.08 down to 6.61%, a 0.5% drop. I told everybody here that they're not going to let just mortgage rates spike, which would then implode the housing market and make the housing market crash. I've said that numerous times. I've said that at least once a week, every week for the past 6 months to a year. I said the housing market's not going to crash. They're not just going to let mortgage rates spike. And a few of you here said I was wrong. It's going to crash. If it's not a crash yet, it's going to be a crash. I still think even with a 6.61% rate, it's still going to be downward pressure on prices and sales. But thinking that they're just going to let mortgage rates spike and just let it crash, that's pretty ridiculous. Why would they do that? Why would they want it to crash when they're going to be the obvious? People are going to be obviously pointing the finger at them if they just let rates spike, right? Yeah, I mean, this doesn't surprise me. I wouldn't be surprised if they drop down to 5.9, 5.8 here in the coming weeks. Now, on the flip side of this, if something breaks, spikes could, if something breaks, rates could spike. But it's going to take something that is going to make the bankers lose control of the debt market, right? And we have seen the failure of this big crypto exchange, FTX, and there's over 1 million creditors. 1 million creditors with that crypto exchange. So this was very wide reaching, a lot of tentacles in a lot of different parts of the economy. And people are saying that there's going to be more contagion that we're going to see from this crypto exchange. We're going to have to keep an eye on that here for you. So yes, something could break. Something could ultimately trigger spiking rates that even the central bank can't control. That would be more like a Lehman Brothers moment, but it could be a lot bigger than Lehman Brothers because right now there's so much debt, there's so much leverage out there. The derivatives market is in the quadrillions. It's so big that people don't even know the total liabilities out there for all these derivatives. And we know that banks are leveraged, trading firms are leveraged, hedge funds, they're all leveraged. They borrow money and then they go bet that money, they invest it thousands of times over. Banks lend to each other to cover up what I call the scheme. And it's a big leveraged casino almost. Some people would call it a casino because they're betting. And when something breaks, it can have contagion and spread through the entire economy, through all the entire banking system. Now, in 2008, we came out with these bailouts. Will we have to do bailouts again? Well, there's debate out there on that. Some people say they won't have to do bailouts because the banks don't have to have any reserves. They can just create their own money. So the banks essentially, with a zero reserve, have become a central bank where they can just create endless amounts of money and either loan it out, or what else can they do with it if they're not just loaning it out, right? So there's a lot of things to really think about here, and no one knows the exact time frame. There's been people predicting a collapse for the last 10 years, every year. Right now there is a collapse, but it's mostly the consumer, the average working class person, the actual middle class person. That's the collapse that's happening right now. It's not the markets, right? So stock market's up and down. We saw weakness again today, and I don't think we're going to see the markets go up much higher because we're already approaching the high that we saw in August. It wasn't the market high, but it was the high for that particular bull run. We're still about 7-8% off of the all-time high that we saw back in January. But I don't see the markets going up much from here. I think there's going to be a downtrend continuing here, and I wouldn't be surprised if some news was floated out there, and that's going to be the trigger for the sell-off in the markets. Like to know what you think about that. That's the way I see the markets operating. There's always a scapegoat. There's always a piece of news that gets floated out there, and the insiders, they know that news is coming, so they get out before the herd, right? The big money, the hedge funds, etc. And a lot of retail traders, that thought this was a bottom or thought they were buying the dip. A lot of them will get burned. That's why you hear statistics like 90% of the people, 90% of traders actually lose in the stock market. So it's no coincidence, right? You could flip a coin and still be 50% calling heads or tails, but why do 90% of the people that invest in the stock market fail? Because it's rigged. It's rigged, folks. You can make money if you're dedicated, if you know what you're doing, and if you're patient, right? If you buy and hold on, ultimately the market down the road is going to go back up at some point and you'll make profits, right? Let's go on to the next topic here. Also, back to the Twitter news for a minute. Twitter alerted employees that immediately all office buildings are temporarily closed and badge access is suspended. Wow. So something very strange happening at Twitter. That's not your typical CEO coming in and reorganizing. There's something very big happening behind the scenes at Twitter. Again, I know I said that earlier, but I just read that other headline here. All right, let's go on to a little bit of personal finance here before we wrap this up here. Personal finance meaning your household budget, food, electricity, etc. All the things you have to buy and keep buying to maintain a household. Dwindling U.S. cattle herd implies supermarket beef prices may rise even more. Definitely they're going to rise more. We've seen these farmers have to pay so much more now for fertilizer. The drought out west. California is the number one farming state in the U.S. It's the number one agricultural state. Many people don't realize that. They think it's all just homeless and beaches and palm trees. But no, we have the most food sent throughout the country here than any other state. And it's a mega drought. And these farmers are hurting. There's a lot of farmers just folding, going under. Fewer animals moving closer to slaughter would signal herds are shrinking, which will likely mean higher meat prices down the road, right? So much for that inflation normalizing. And actually, even a normalization of inflation is still not good. That means prices are still high and they're remaining high. They're just not going up as fast, right? So when people say a normalization of inflation, that's not something we should want. We should want deflation. We want falling prices. We want prices to get back down where people can afford so people don't have to take on so much debt. The U.S. consumer right now is racking up debt like we've never seen before, especially credit card debt. There is a statistic here. Let me pull it up here for you regarding credit card debt. We talked about this a couple weeks ago, I believe. During the third quarter, Americans' credit card balances climbed to $930 billion, the biggest annual increase in over 20 years. Do you know now why they had to drop mortgage rates by so much, the biggest drop in 40 years? Because they know that people cannot get into these homes at these prices, and they still want people to buy homes, but they're also having to fight inflation or pretend like they're fighting inflation on the other hand. What an economy, folks. What a financial system we're in right now. What a time to be alive. We could wake up and this whole thing could implode overnight. I'm not saying that's not possible. It is possible. It is possible. Something could break. Something could unfold, a strike on U.S. soil, an act of war that could be the excuse for them to just let these markets drop. But without something big happening, without some big event or piece of news, I don't think they're just going to let markets implode. They have to blame it on something. A hacker, they could say Russia hacked us, and maybe Russia will hack us, right? Anything could happen. Anything's on the table. It's a crazy world. If what happened in 2020 didn't convince you that this world is insane and going beyond insane and further, then I don't know what's going to convince you, but fasten your seatbelts, keep stacking. Silver, still my number one thing I'm stacking. Food, whenever I can, extra food. Food prices, I think, are going to keep going up. Higher Fed funds rates, not going to stop that. Right, everybody, we're going to wrap this up. Thank you for being here. Big love to everybody listening and watching right now. Bye now.